It seems to be somewhat of a telling session here in Asia. We are seeing implied volatility creep up in both the currency and the equity markets here. We're seeing oil prices continue to head lower, and I think if we do see them move convincingly through $35 and down to $30, I think equity markets will underperform quite significantly. We are starting to see credit spreads widen, which of course is seen as a leading indicator for equity markets. That's not a positive situation there as well. But the key thematic very much being oil in there, and if oil goes down, equity markets are really going to come under sizable pressure here. In terms of equity markets, well, Japan really leading the way down. We are seeing some fairly shaky economics developing in Japan. We saw that last week with the Tankan, inflation expectations, and also the industrial production numbers there as well. Although wages have been a little bit stronger, but certainly the equity market, they're all under all sorts of pressure. The highlight of our session, well, twofold. First of all, the violent moves we've been seeing today somewhat in the Australian dollar. We saw a very weak trade balance number where we saw the deficit widen on some weak export numbers there. But then we've seen the RBA announcement at 2:30 local time, and that caused some big wild gyrations, as these central bank meetings generally do. The central bank there in Australia really acknowledging the strength we've been seeing in the Australian dollar. Most people had expected that, but it has been driven by its key terms of trade, which is positive, of course. But they have said if the strength in the currency persists, that could be fairly problematic in terms of the rebalancing of the economy. The Aussie dollar pushing up about 30 pips after that announcement.